Well, hello members, and welcome to this week's weekly reviews, July 24th, end of the month. We got one more week. Had a big push again last week. In particular, we saw rotation into the NASDAQ. NASDAQ starting to make a move compared to the other indexes, but it was another week of up. If we move down to the technical summary, the biggest thing that we saw here last week is that we have now pushed up and met the ABCD targets on the all the indexes actually, other than the S&P 500. So that ABCD target on the IXIC, the NASDAQ, for example, has been met now. Push down, push up, right, and you meet the target. So each of those, whether it's the NASDAQ, the NDX, Russell previously already, or the S&P, have either finished or are just about to finish. The S&P has a little bit farther to go. 2190 was the number. We closed at 2175, so basically 15 points away. And I think that the coming week, that's the target. You get a little consolidation, one more pop-up to finish this off, maybe a little bit more of a push on those other indexes, just as we've seen. The Russell was the first to make it up there. Russell goes up there, consolidates, and it's kind of hanging there while the others play catch-up. And so, any way you look at it, this market continues to exhibit strength in terms of the way it's trading. And I suspect we're going to see a consolidation and some sort of a pullback that eventually sets up another ABCD target, for the upside. For example, if I'm sitting here looking at the Russell, I could easily see this. Let's see if we got a lower high is right there. So the lower high comes after that point, right? A little small pullback so far, and then a push up again potentially. But I suspect what we're going to really see is some sort of a pullback that's a little deeper, maybe using this swing point highs low. So maybe we pull back into this area and then set up the ABCD structure to go higher, and then fulfill, if we bring over the weekly chart, then fulfill the sort of ABCD structure that stands in place over here. So if I look at this one and draw it, we would see this ABCD starting here, right, continuing up to there, getting the pullback, right, and then if we get that little pullback on the daily chart, then that could give us the position, push up to these prior swing point highs, new highs, and that would be the ABCD target. So in other words, a nested ABCD structure here, right, on the daily chart and even on the weekly chart, that gets us up towards those targets. So that's the best case. That's if this market wants to continue higher. I suspect that's the way it's going to play out in that situation. And those targets, as we can see, are quite a bit a ways higher. So push up, some sort of consolidation, probably pull back, and then we get the next push. The big thing this week looks to me like it's going to be Apple, Facebook, Amazon, and Google earnings. Those are all big cap technology stocks. Rotation into the Index 100 has started the last couple of weeks. If it's going to continue, those earnings are going to have to propel it. And personally, I think that we're going to see a pause after the extension projections met. But if we are to see a continuation without even much of a pause, it's going to be as a result of those. The other big thing this week is the central bankers again. Federal Reserve on Wednesday, expectations, more dovish talk. Bank of Japan on Thursday, expectations there, more QE, maybe even more aggressive cuts on the rates, on the negative rates, making that even more aggressive. So expectation-wise, you're set up for the pullback to sell the news, because the expectations are that they have to continue to do something. And if they don't do it immediately, then potentially you get some sort of a pullback as a result of that. If we look at the situation here with where do we stand, the sector rotations in full force. You got that NDX the last couple of weeks starting to move, but you haven't seen any kind of rotation pullback elsewhere. In other words, these other areas that have been strong, ITY, IYR, XLI, XLK, the SOX, all of those are holding or either continuing to push while you're getting that rotation. And even the beaten up sectors now, that the ones that had been kind of beaten up, are starting to take off again, and in particular it's these first three, right? The ITY, the XLB, and the IBB. A little bit of a pullback in these other areas, and they're starting to take off too. Fundamentally, if you look at the fundamentals, you're sitting there scratching your head asking how this can continue, because you got a backdrop now of falling earnings for 5 straight quarters year over year. Usually when you get earnings recession, which is essentially what's happening, you get a pullback in the market, but that's not what's taking place. And why is that? Well, it's primarily because of the fact that the U.S. continues to do okay in terms of economics, slow growth, continuation, and central bankers are propping up everything around the world one more time. Typically, when you see a push higher, you get some sort of a, intermediate, on the intermediate term, you get some sort of a push that lasts anywhere from 7 to 9 weeks or so. And so if I use the weekly chart here on the Russell, you can kind of see that sort of thing. So for example, if we're looking back at that first push that came off the lows back last year, summertime, that was about 9 weeks. Right, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, right, before you actually peter out and turn over. If you look at the one that just came off the bottom, the 9 weeks turned into about 12 or 13. That's when we got the consolidation, right? And we're in week 4 of this move. Usually, 5, 6 weeks in, you get some sort of a consolidation. Even did it here on this strong one, did it there as well. That consolidation many times can lead to the next leg up, right, to where you get the 9, 10 weeks. If we're going to see the consolidation, I suspect it's here pretty soon, this week, next week, and then the further push if that's the scenario. We're getting volumes coming down on this move higher. That typically also happens. You would like, any more, that's what happens. You would like to see it actually expand, but it's not. But overall, it's hard to argue with the way the market is behaving. Even if we get the consolidation, that first move down more than likely is going to get bought, not sold. And so I would be expecting that sort of a scenario in the coming days and weeks, where whatever push takes place to the downside, it's immediately going to be bought the first time around. And so any kind of a pullback, if we're looking here on the NASDAQ, any kind of a pullback into an area where we have support, and in this case the NASDAQ, we had a consolidation here and now a little breakout gap up here. So anything back into this area and certainly back into the swing point high breakout, that should be bought, and should be bought rather aggressively. And my guess is that you won't get back underneath this area on the first pullback. So don't set your expectations too low on the pullback. The first one is the best one to buy, and when we see that pullback, we're going to have to take advantage of it and make the aggressive buys, get mostly invested on the expectation that you'll at least go back up and test those recent highs once it takes place. And that's what I'd be looking for, and that's how I'd be looking to play this on the way back. The bottom line, strong follow through again. Indexes reached their projections other than the S&P. I would expect more consolidation, maybe a pullback at worst, but you're going to want to buy that pullback when it takes place. Here's the potential scenarios. I haven't been on key here for about 3 weeks. It's been stronger than I expected for 3 weeks in a row now. I guess that also tells us something about the fact that when this does pull back, you're going to have to be aggressive in your buys. The best shorter term trade, we're really too extended for me to suggest much of anything here. I would still look to the post earnings trades as the best trades. I took a little position, for example, last week late on Starbucks after they reported earnings. Solid company, continues to be best of the class in that space, in the retail space. Even though they struggled, people bought their earnings again. And if I looked at the best longer term trade, I would reiterate this dollar. So if I look at the dollar with the dollar has broken out on this time frame. We're talking about the daily time frame, right? Broken out here, got over the swing point high, consolidated, and now has broken out again on this area here, this swing point high, right? And starting to leg higher. There's a little ABCD structure in place that can take it even farther. And if we look at it on the weekly time frame, that's where the real strength is that we should be watching, and that is now it is coming into this higher range, right? That projected range is right there. This ABCD structure that's in place looks like it's going to move it up into this swing point high. It's going to attack that and probably get a little retrace off of that back into the area that it is, or maybe just back to these prior highs. And so if I'm looking at the dollar as a trade, I either want to buy some here if you haven't, buy it on any kind of retrace back into this area. The expectation is it will get back up towards the top of this range before it's all over. And so on a longer term trade, that still looks to be one of the better trades out there. So that's where we stand this week. It's still positive. There's still no signs. It looked like on Thursday where we're going to get a reversal sign. Market actually did more volume, and you saw me Friday morning come out and say we should hold, and we did. Until we get some sort of a clear reversal sign on more than just one index and some of the sectors as well, you have to believe this market is going to continue to try to trade higher, and you have to continue to run with it. That's it for this week. Thanks. I'll talk to you as the week gets underway again.